Hello everyone, my name is Marilena and I will be your hostess for today. Together with me I have Peter, our senior market analyst at IronFX. Hello Peter.
Hi.
Thank you for joining us today as we're looking at the fundamentals that are driving the markets currently. So Peter, how are FX markets behaving today?
Well, we had rather slow markets yesterday. The US dollar was rather inactive and the markets are practically awakening from the long weekend in the US due to the 4th of July holiday. I would be noting that there are a number of financial and fundamental issues which are driving the markets. Definitely the markets' worries about a possible recession could play a key role in that direction. Should there be an extensive market whereas we may see safe havens, JPY, the US dollar, or even CHF gaining, while on the other side commodity currencies such as the Canadian dollar and the Australian dollar could weaken. I would be also noting that we have further developments regarding the war in Ukraine, which could play a role. We may also highlight for the common currency the necessities of Ukraine in funding, not only for the war, but for the general rebuilding of the country, which may weigh on the common currency somewhat. Other than that, I would like to see how the American session will start to see and get a more exact sense of the market mood.
Very nice. I guess we are to turn our attention also on US stock markets, right?
Yeah, US stock markets are to reopen today. Once again, should there be extensive market worries, we may see stocks as riskier assets actually dropping. On the flip side, we have to note here that over the early hours of the European session, we had a slight degree of optimism in US stock markets in the pre-market hours, which tended to provide some support, and that was a bit encouraging. So there are hopes for a green day as the American session opens. Let's hope that it actually works out like that.
Interesting. And I should understand that gold's price also tend to remain rather stable?
Yeah, there was a relative inactivity in gold's price. Actually edged a little bit lower yesterday. I would be highlighting once again the negative correlation of gold with the US dollar, as the precious metal is denominated in US dollars. Should we see the US dollar weakening, we may see gold prices getting some support. At the same time, I would be highlighting also the negative correlation of gold with US yields, US bond yields. And should US yields rise, given that gold bears no interest, we may see gold's price getting a little bit under pressure here.
Did oil prices edge higher?
Yes, there are some supply worries for the oil market, which tended to push oil prices somewhat higher. It was characteristic that there are some worries about the idea of actually cutting the flow of Russian oil above a certain price, which could have an adverse effect on the oil supply side, i.e. push oil prices higher. At the same time, we note that in Norway there is a strike and the flow of oil has been stopped as workers there are practically fighting to increase their wages in face of the high inflation. Overall, we tend to note that we may see the supply side worries driving the oil market rather than, I would dare to say, demand factors like whether there's going to be a recession, which is also possible. So should there be a recession, we would expect a lower demand which could weaken oil prices. On the flip side, should the market be a little bit more optimistic about a more shallow global economic slowdown, we may see oil prices picking up.
Interesting. And what's in the calendar today?
Well, we had already practically from the Eurozone the composite PMI figures. We note also UK services PMI figure. Both are the final figures, both are for June. In Eurozone, practically the slowdown of the expansion of economic activity, and that's across sectors and across member states, was reaffirmed. and that could weigh a little bit on the euro. On the other hand, in the American session, I would be noting from Canada the building permits. Should the growth rate accelerate, we may see the CAD getting some support here, as it would imply practically a greater degree of economic activity for the Canadian construction sector. From the US, I would be highlighting maybe it's also the key release of the day. That would be the US factory orders growth rate. That's for May. It's expected to accelerate. And it's interesting practically on the idea that most of the financial data stemming from the US in the past couple of weeks were on the downside with the exception of inflation. So should we see practically the factory orders growth rate accelerating, that would imply more economic activity to come and could provide some support for the US dollar. Other than that, I think that attention has started already to shift or may start shifting today towards the end of the week when we get the US employment report for June.
And what about the monetary front?
On the monetary front, we had RBA's interest rate decision this morning during the Asian session actually. And it was characteristic that the bank delivered a 50 basis points rate hike. That was more or less expected. I would also note that the bank in Governor Lowe's accompanying statement expressed an optimism about the resilience of the Australian economy. At the same time, more or less clearly stated that the Australian employment market was tighter in the past few months than before. So both of these factors tend to imply that the bank will continue to have a hawkish approach, as it's a green light. On the other hand, the bank also noted that there is a slight degree of worry for the household spending of Australia and whether that's going to be continued. So we have to also add more attention to releases from Australia like the retail sales growth rate and consumption related data. The bank at the end of the accompanying statement practically mentioned that it will continue to hike rates, yet at the same time linked any future, the timing and the size of any future rate hikes to incoming data. So there is a slight degree of uncertainty here. Now, to be data driven, that would provide more clarity into the into the RBA's intentions. And I would also be noting here that most probably we may see inflationary pressures being continued, and that could drive RBA to further rate hikes. Thus, the monetary policy outlook differentials may provide some slight support for the Aussie. Mind you that the Aussie at the time of the release as such dropped around 30 pips against the US dollar. And it was characteristic that the market may have expected a more aggressive stance on the behalf of the bank, which didn't actually realize, so we had a slight disappointment here. Nevertheless, the Aussie recovered the ground lost and regained the previous levels.
Anything else you would like to add, Peter?
Well, as a more general comment, I would be highlighting that we're ending the long weekend and practically the markets are reopening. I think that today the main event will be exactly what kind of mood the market will be in the American opening. Should there be a more optimistic mood, a positive one, that would imply more or less some bidding for riskier assets, while should there be a more cautious sentiment, we may see the market turning towards safe havens, and among them definitely the US dollar.
Great. Thank you, Peter, for your time, and everyone for watching. Join us after a short break for technical analysis with Peter Yosif.
So welcome to the technical analysis part of the presentation for today. We have a big surprise this morning, actually, in the European session, as we had an opening with the US dollar getting substantial support. You can see in your charts right now, it's the 4-hour chart of the USD index. And what you're seeing is actually quite interesting, given that, let me make the readjustments here. The price action has moved decisively higher, breaking the 105.55 resistance line. It should be a new record high. Let me have a look. Yep. Practically, it's a new record high. Okay, you could go back 20 years plus and find some similar levels, but in practice, there are no substantial resistance lines above the R3 right now. Let's readjust. Let's set changing now this 105.55 resistance line to support line as the price action has broken above it. Setting the new R3 being placed now at 105, 107, 109, 110, 100, and 10.40. $111.40, sorry. Let's make the readjustments. We are moving in around 150 to 200 pips range. Second, the resistance line being placed at 109.50. I got a question about the US dollar index, and that was whether the US dollar index could actually reach the level of 110. I would say that's a bit optimistic, but cannot be excluded. It's a possibility. Should the price action actually break clearly now the 105.55 level, which has done so in the European session, and start aiming for 107.50, that would be quite possible in the next couple of months. And the last support line being placed at 101.30. There we have it. So, note that the price action of the US dollar index has escaped its sideways movement, which has been in for since the 10th of June up until today, which was the 5th of July. So it's almost a month now, which has been moving between the 105.55 and the 103.20. Today decided to move a little bit higher, breaking above the 105.55. On the other hand, it seems that the bulls have some quality here, given that the RSI indicator has reached the level of 70, implying a rather bullish outlook for the index, given also that it has broken the upper boundary of the past sideways movement. We are forced to switch, even temporarily, the bias for sideways movement in favor of a bullish outlook for the index. Nevertheless, I would by highlighting also two factors of caution here. The first would be exactly the fact that the RSI indicator has broken, or has reached, to be more exact, the level of 70, which may imply that the index is nearing overbought levels and may be ripe for correction lower or some kind of stabilization. At the same time, once again, the price action moved decisively higher, and has reached, even broken at some point, the upper Bollinger Band. And once again, that would be another indication or signal, if you prefer, that the price action has moved higher too fast and may be forced by the Bollinger Band to stabilize somewhat until there is some room created. And it's indicative of the wider volatility that the upper and lower Bollinger Band are diverging, while there is a slight inclination to the upwards of the 20 moving average, which is also the medium of the Bollinger Bands. Should the bulls maintain control, we may see the index actively aiming for the 107.5. On the flip side, for a bearish outlook, which could be possible, but for the time being probably not probable, we would require clear breaking once again to the downside of the 105.55 support line and also breaking of the 103.20. And for the pair to start aiming for the 101.30. That's too wide of a move and could be realized only within days. So for the time being, we tend to maintain a bullish outlook unless the index corrects lower and re-enters once again the 105.55 and 103.20 range. And in that case, we would practically treat this as a false break. Okay, let's have a look now at US stock markets. Making a start with, intense red bearish downward candlestick. But nevertheless, it's been a while since we last visited this chart. So let's make some readjustments here. First of all, we are correcting the previous support line at 31,345 and turn it into a support line. Let's go hunting for a new support line, S3. Okay, a little bit lower, second, third. Now that could widen up until here. This touch here. This was the point when we had a clear downward pressure. By the way, mind you, it actually verifies also the 29,690. Nonetheless, the index, Dow Jones drops and reaches as low as the 28,900 in green. So we have a new final support line. Let's make the adjustments. Sorry. There you go. The 2,760, 31,955, 31,345, 30,625, and the final one at 28,900. Now, given that the price action was on the rise, and that was practically since Friday, let's have a look. Since the 1st of July, since Friday. And now corrects lower. It was aiming for the 31,345, yet it didn't quite reach it. So it remains between the 31,345 and the 30,625. Mind you that the RSI indicator below the 4-hour chart is actually at a reading of 50. So we tend to maintain a bias for sideways movement between the R1 and the S1 here. On the other hand, the bearish tendencies seem to be intense. Should the price action of Dow Jones actually break below the S1 30,625, we may be able to switch our bias for our current bias for sideways movement in favor of bearish outlook. On the flip side, should the price action regain momentum and start rising, we may see it breaking the 31,345 R1 clearly, in which case we would be switching our bias in favor of a bullish outlook once again. Yep. For such a release though, I would expect the RSI indicator to reverse direction and start aiming actively for the reading of 70 here. Anyway, for the time being, we maintain a bias for a sideways movement between the 31,345 and the 30,625. Should the bulls take over, we would expect the price action to clearly break the 31,345 and start aiming for the 31,955, a level which was aimed for around the 28th of June and tested as a resistance line on the 23rd of May. Also provided some support here. To the downside, and should the bears take over, I would expect the price action to break the 30,625 and start actively aiming for the 30,625, which is also the lowest level in our chart, noted by the price action on the 17th of June. Note how the price action was moving downwards and was reversed, making a beautiful U shape here. Great. Let's have a look now at S&P 500. S&P 500 has a similar candlestick to red candlestick, bearish candlestick, downward candlestick, name it like you want. However, as there was substantial time since the last time we visited this chart, we have to make the recent adjustments. Let's find the new resistance line on the top, probably around here. Actually, I would note this support line. Yeah. You had 1, 2, 3 touches, and you had also touches a resistance line here. So I would be keeping a close eye over this level, colored in red. Definitely not magenta, red. And that would be the 4,075, 4,075. Let's make the readjustments. That's pretty wide, not so convincing. Let's have a look. Could be placed here, could be placed here. This seems to be more convincing as it has also resistance points here. No. Don't forget we're talking about October last year. Let's check this out once again. Yep. No, sorry, that's October 2020. So we have a support line at 34. 3,465. We're sticking to it for now. Anyway, it's the ultimate bearish scenario here. This I would prefer it a little bit lower to make a touch here. And the reason is why I altered this resistance level is that because you see we have the touches here which are quite recent, so they seem to be valid, while at the same time you have older touches back here. Okay. And this one could move just a bit lower at 3,855. Yep. And we have the touch here. So I made the recalibration practically because the recent price action seems to be slightly differing from prior touches. So we had now the 4,075 block, the 3,950, the 3,855, the 3,735, $3,600 round figure, and the 3,400, and that should be 65. For the time being, we maintain a bias for a sideways movement as the index rose, yet remained high up until it reached the 3,855 and corrected lower. As long as the price action remains between the 3,855 and the 3,735, we maintain a bias for a sideways movement. Now, for a bearish outlook, we would require a clear breaking of the 3,735, and we would expect the price action to start actively aiming for the 3,600 level. For a bullish scenario, we would require the price action to reverse direction, break the 3,855 clearly, and start aiming for the 3,955, which provided resistance twice here. It was a double peak here. Let's have a look now at Nasdaq. Nasdaq, which has also dropped, however, will need a wider correction here in the levels to readjust to the new touches. One would be here. We have one touch, second touch, three touches, four touches. This is more valid. And I would also be highlighting this one, a touch here, and another support. And the final resistance line would be placed here. And as we had to touch a little bit lower, could be higher, lower here. That would be the 12,940. Also the 12,245. And last but not least would be for the resistance lines. Let's try 11,030. touches 1, 2, 3, 4. And let's have also in the support lines the 11,030 with one touch here. I would like to reaffirm the S2 and the S3. So please bear with me for a couple of minutes. Let's go back. Further. Here we go. We had the S1. The S2 has a beautiful touch here. And the S3. Okay, they're valid. We keep them. They're narrower than the other ones. I would be highlighting also another possibility for support line. That would be a mid-level, and that would be here. However, that would be only a level to keep an eye out. It's a ghost, but still present due to the touch here, and also some support here. That would be at around 11,310. Let me check. 320. Once again, we tend to maintain a bias for a sideways movement, yet I would be noting that for a clear bearish outlook, I would require clear breaking not of the mid-level, but of the 11,030 support line, that's the S1, and for the index to start actively aiming for the 10,680. To the upside, and should the bulls take over, we would expect the price action to break above the 11,730 and start actively aiming for, maybe even reach the 12,245. In a similar movement like this one. Note that this movement occurred in the doing of 2 days. It was from the 23rd of June until the 27th of June. And that would be practically 4 days. Let me check that. Yeah, that was 3 days because we had also weekend in the midst. So it's possible. It's possible for the price action to, if it starts rising, to start rising, break the 11,730 and reach the 12,245 within the reach of 3 days, 3 working days. That's until Thursday. Why? Because we had the similar price movement here. On the other hand, the price action, note how steeply it dropped. That was around the 16th of June and reached that, covered the distance between the 11,730 and the 11,030 within 1 day, 1 session. And we have an opening which is pretty similar to the one today. So should the bears take over as a first support line, I would be placing the 11,030. Should the S1 be broken, the gateways are open. Practically, the gates are open for the 10,680, the S2. I would like to see also how European stocks are behaving, and I'm going to take, this is a chart, it's a pretty old one. Note how this level was beautifully tested. Okay, let's restart this. We're making a start with the R1 being placed somewhere here with the peak. This is the 4-hour chart of the DAX, the German index, Frankfurt. Second peak could be placed somewhere here. The third peak somewhere here. You have one touch. You have also support touches here. You have another touch, second touch on the R2, support touch here. And you have resistance touch here, support, support. To the downside, the first support line is pretty close to the price action. It was almost tested here and retested earlier on. We could widen it a little bit. Let's have a look at the daily chart. Okay, drilling down to the 4-hour chart. Moving them downwards. And the final resistance support line could be placed a little bit wider, somewhere here. Because you have one touch, sorry. Yeah, we have tested this again and again. Okay, let's make the readjustments. Downward motion. Also, the RSI indicator is between the readings of 50 and 30, actually aiming for the reading of 30, which tends to be signaling bearish outlook for the, or bearish sentiment if you prefer, for DAX. I would also be highlighting practically that there's still some room between the lower Bollinger Band and the price action, so the bears have still some room to maneuver here. Let's make the readjustments and split them. 13,620. $1,260, 12,925, 12,615, 13,340, and 11,960. Placing the labels. S2 now coming to play at 12,340. Locking in. S1, which is currently being tested at 12,615. The first resistance line being placed at 12,925. The second resistance line being placed at 13,360. And the final resistance line being placed at 13,620. So we tend to maintain a bearish outlook given the downward trend line, the fact that the price action of DAX has formed lower peaks consecutive lower peaks and lower troughs. Now I would expect the bearish outlook to be maintained, in which case we may see, actually I would like to see how this works out. Yep, that's more indicative. And we would like to see it breaking. This would be considered as a false break practically. Anyway, I would be expecting the price action to break clearly the 12,615, and the main reason why is because for a bearish outlook to be maintained, we would necessitate lower troughs. So we had one trough, actually the first one was here, a second lower trough, a third lower trough, a fourth. Now the fifth has to drop a little bit lower. It may not be exactly a channel, but still a downward channel, but still it would be such a movement. Should the 12,615 be broken, we highlight the 12,340 as the next possible support line. Mind you that the RSI indicator is actively aiming for the reading of 30, implying a rather bearish sentiment, while at the same time the price action has not exactly reached or even breached the lower Bollinger Band, so we may be having some room for the bears to continue to move. I would be also noting that we had to the upside, and should the bulls take over, I would expect a reversal, a breaking of the downward trend line. That would be the first signal of a trend reversal, either a sideways or a bullish outlook. However, for a bullish outlook, we would require also clear breaking of the 12,925 resistance line, which provided resistance here and support here. And thus, the way would be open for the 13,360, which provided resistance here and support here. Quite interesting. Let's see how Japanese stock markets behaved. Or even better, let's have a look at gold. Gold's for our chart. We need to make some work here. Let's readjust the levels. Now this one should be renewed as a resistance line and recalibrated, as we had consecutive touches at this level. So that would be the 12,900, sorry, 1812, 1812, 1813 maybe. It's a little bit too low. Yep. This level should be revisited as well, somewhere here, when you had a resistance here and a support here. So that would be cancel the 1838. $1,812. Go a little bit higher, 39 maybe. Yeah, that's better. So it's the 1839. And above that would be the 1870. That could go also a little bit higher. Okay, it has a good touch here. I'm leaving it. 1870 it is. Now the support lines, a different story here. We have the 1787, which we recalibrate now to match the touch at 1785. And we're having also, sorry, the 1762. And the 1745. And here you have it. So we have a temporary stabilization as the downward trend line has been broken. However, the bearish candlestick, practically as the US dollar strengthened its weight of gold's price as well, tends to maintain the bias for a sideways movement between the 1812.50 and the 1785. We tend to maintain thus a bias for a sideways movement for the precious metal. Should the bulls take over, I would expect the price action to break above the 12,050, which was tested several times, and start actively aiming for the 1839, 1840 maybe. Should the bears take over, I would expect the precious metals price to break the 1785 and start actively aiming for the 1762. So that should sum it up for the day. From all of us here at IronFX, best wishes for solid trading.
Good morning traders, my name is Emily and welcome to our daily trading tips. Knowledge is power, so inform yourself. One of the daily routines of successful traders is to keep up on the latest market news and events that affect the Fed's interest rate plans, the economic outlook, and etc. So do your homework and be organized. First step is to make a wish list of pairs you'd like to trade. Then keep yourself informed about the selected markets. Scan market news and visit reliable financial websites. Select 2 or 3 websites and read some selected news affecting the pairs you have chosen. Then read 2 or 3 analysis reports on how the issues could affect the pairs you have chosen. Never rely on one analyst alone, as they may be wrong and drag you with them. Never forget ignorance costs, while preparation tends to pay out profits. As I said earlier, knowledge equals power. Knowledge, however, should be followed with action in order to be useful and productive. The most successful traders in the world are the ones that take action and don't waste time hesitating. A successful trader always opens the trade rather than waiting for the right time to follow up. Even if the trader is wrong, he will take the loss, study what he did wrong, and move on. But the persistent trader, the one that is always thinking and searching for the accurate trade, is the one that survives in this game. At the end of the day, if you are serious about your trading, you will base your trades on a plan rather than just being a random decision maker. Make sure your plan is realistic and you act swiftly. The day has come to get out of the demo trap. There are traders which start with a demo account and never make it past that. You will never be able to make money as long as you remain in the demo trap. If you want to actually make money, you have to step up and move to the next level. As a beginner, a trader tends to make more mistakes due to lack of experience. Start small with an initial deposit of $500 to $1,000 and keep the number of pairs as low as possible, maybe 2 or 3. The low number of trades is going to help you monitor your trades better and make sure that they do not tie up the total of your initial investment. Should some trades turn south of surplus of your deposit, is going to allow you to defend these positions. Thank you so much for joining us today, guys. Stay tuned for our tomorrow's next live.